The Radix Babylon update is happening Wednesday. I'm recording this video Sunday. Should be posted by Monday or whenever you're watching it. Hopefully it's before Wednesday. But I just wanted to make this video to do an in-depth analysis on Radix's tokenomics. A lot of people on Twitter have been hitting me up saying, hey, are you worried about this? Like, basically the vibe I'm getting from Twitter is that Radix has bad tokenomics and people are asking me all these questions. So as promised, I'm making a video to go through all of their tokenomics, what happened with all the tokens, how they were allocated, where are they locked, etc., etc. Like, I'm not going to leave anything out in this video. And before I get started, I do have to say this is not financial advice. Please talk to your financial advisor before making any investment decisions. This video is for your education purposes only. And like I always say, do your own research. Okay, so let's get into the content. But before I dive into the Radix tokenomics, I made a video on my Radix ecosystem yield farming strategy. Definitely give that a watch if you haven't. When I made the video, the yields were way lower than they are now, and they were high back then. So let's cover that first. Okay, so I'm gonna be reviewing the caviar swap yields, not the Aussie swap yields. So if you look at this, when I made the video, they were like 200-300% or something like that. Now you're getting a 1,574% APR. If you do the math on that, that's literally 131% per month. That's insane. And then this pool right here, so this is the pool I'm in, 131% per month right now. Obviously this isn't, gonna last, but like I said, my goal is to accumulate these tokens ahead of the Babylon launch. This one is printing 231,013%. That's 19,251% per month. Again, pretty insane. And like I said, these aren't gonna last, but the whole point of being a yield farmer, or a big point of being a yield farmer, is you wanna go where the yields are high and accumulate projects that you're bullish on. And if you're bullish on Radix ecosystem tokens, this could be a good opportunity for you, because you can provide liquidity in just the XRD token, but you can choose which exposure tokens you want here. It's pretty dope. And you can see the historic 7-day APY and also the historic all-time APY. So as you can see, if you've been in these pools since inception, you'd have made a positive return. All right, so now let's get into the purpose of the actual video. So I got the Radix chart pulled up here on the monthly. And as you can see, it's already kind of starting to pump here. If we go down to the weekly, we can see it's been, I guess, just pumping for a week. If we go down to the daily, we can see it's trying to turn this previous level of resistance into support. Again, this pump was in anticipation of Babylon releasing. So I would say we're at least going to go back here, if not higher. From current levels, if we just go back to where we were, that's 134% return in a bear market. You're not going to hear me complaining about that. I would speculate that if the Babylon is actually going to launch, probably going to go a little higher. How high? Not sure. Maybe it's this previous level of support, so that give us around almost a 200% return, but I think the Radix ecosystem tokens are going to pump even more. So now let's go to CoinGecko. So if we go on CoinGecko, we can see Radix has almost cracked the top 50. They're number 55. Last time I did the video, I think they were number 66 or something like that. And if we look at their tokenomics, I want to talk about the difference between fully diluted valuation and market cap. So the market cap is just the circulating supply times the price. That's how you get the market cap. But the fully diluted valuation takes into account the maximum supply. So as you can see here, we have a market cap, and this is the fully diluted, or FDV, is what institutions use to value companies in the stock market. So it's a more credible metric when you go to value a stock or a crypto project, because you always want to take into account the max supply, and you want to figure out, which is what we're going to go through in this video right now, how's the rest of the supply going to come into the market. All right, so we have an FDV of 1.5 billion and a market cap of 660 million. So pretty much around half of the tokens are on the market right now and another half not. So let's figure out why. And at the end of the video, I'm gonna give you guys my opinion on the Radix tokenomics as a whole after I go through all this stuff. So the good thing is that they didn't raise any VC capital. So there isn't like some VC that's, waiting on a cliff or some vesting schedule so they can dump their supply on the market, as you're gonna see here. So that's the good news. So if we go to the Radix website, radixdlt.com, you click papers and you click Radix Economics, it's gonna bring you here. So let's start to go through this. So if we scroll down here, as we saw on CoinGecko, XRD has a maximum supply of 24 billion tokens. 12 billion was allocated at the genesis of the Radix public network. So 9.6 billion of these tokens are unlocked as part of the circulating supply. 2.4 billion are indefinitely locked in the stablecoin reserve, which we're going to go through. And 12 billion XRD is being minted by the Radix protocol as a network emission to reward stakers and validators, because this is a proof of stake blockchain or delegated proof of stake, one of those, over an approximately 40-year period. Network emission commenced with the genesis of Radix public network on July 2021. So if we look at this here, the circulating supply is all these tokens that were unlocked that we kind of just went through and going to go through more in depth. And the $2.4 billion stablecoin reserve is locked and not included in the circulating supply. So the total supply right now is 12 billion XRD plus the network emissions to date. All right, let's go through how the token was allocated. Okay, so the Radix token XRD is the native token of the Radix public network, is used for staking as part of their delegated proof of stake system, like we just said, and is used to pay transaction fees which are burnt, and we're going to go through why that's a good thing. Okay, XRD has a maximum supply of 24 billion. Of these 24 billion, let's go through exactly how they were allocated. So half of them were issued at Genesis, and the rest are set to be released as people are validating the network. So October 2020, 2.7% was allocated for members of the Radix community who purchased Radix tokens at a price of pretty much 3 cents in October 2020 sale. Fully unlocked, which means on the market. All right, so when they're fully unlocked, it means they're on the market. You don't have to worry about it unlocked. Like, that's a good thing. All right. Well, for price going up. Radix community, 12.5%. Fully unlocked again. Allocated to the early Radix community members who contributed approximately 3,000 BTC between 2013 through 17. Okay, great. Liquidity incentives. 0.8%, fully unlocked again. Great. Allocated to participant of the liquidity mining program that took place between November 2020 to May 2021. Founder retention, 10%, fully unlocked again. Allocated to the RDX Works Limited, which has funded and developed Radix technology since 2017 until the present day. Radix Works Limited holds the tokens it retains from the insatiation of the Radix ledger as a treasury asset of the company. So someone on Twitter made it seem like this was kind of an issue. And it's understandably so to speculate on these things, but I like to look at this as like a savings account. If something goes wrong or they want to fund something, it's good to have something like some kind of cushion that you can use to bootstrap this network, because they're building a layer 1, which is a pretty ambitious project. So I view that as a good thing. And 10%, that's not a bad ratio. Like, I've seen good projects with way higher percentages for the same purpose. So I look at this as a good thing. Okay, 9% here, fully unlocked, allocated to Radix Tokens Jersey Limited, which is a wholly owned subsidiary of the Radix Foundation. The objectives of the foundation are to promote the use and development of the Radix ledger, as well as provide education and support for the Radix community, ecosystem, and operate incentive programs, events, and more. Hey, you're going to need some tokens to pay people sometimes to build on a network. Again, I don't view that as a bad thing. Developer incentives. This is fully unlocked again, 2.5%. If developers aren't building, they're not building the things that people use. If people aren't using it, no one's on the chain. It's a ghost chain. So, and we talked about their developer royalties in the sense that if you're building something that people want to use or fork, you get a royalty on a per transaction basis. Radix really cares about the developers, which is, like the backbone of a blockchain network. If people aren't building on it, people aren't using, because there's nothing for people to use if it's nothing built. Network subsidy, 2.5%. Fully unlocked. Again, allocated to the Jersey Limited to fund grants. That's another good thing to get projects to build, because a lot of times founders don't have money to build. So sometimes you need a little help. And then you have the stablecoin reserve. These tokens are locked and removed from the circulating supply. The Radix Foundation has a 10-year period in which to review and disperse this reserve to support a systematic stabilization protocol, which may or may not require the use of the stablecoin reserve. Should the stablecoin reserve not be needed, it will remain locked and be destroyed after the 10-year period. So we're going to dive deeper into that right now. But if we look at this, pretty much 50% of, we just went through the 50%. If you add up all these percentages here, 10, 2.5, 2.5, all the way up to the top, it equals 50%, like right on the nose pretty much. And they're all unlocked, and they went through all the purposes that they were for. All right, so now let's dive into the stablecoin reserve. Okay, they go on to say intrinsically decentralized stores of value also introduce a degree of systemic risk when pegged to an external store of value such as USD. To potentially help bootstrap important projects of this type, the stablecoin reserve was formed. This reserve holds 2.4 billion Radix tokens that are locked and entirely removed from circulating supply. It's a 10-year period, like we just talked about. Should it not be needed, it'll remain locked and destroyed after the 10-year period. Guys, this is really, really good. Radix basically has 2.4 billion Radix tokens set aside in case that there's a stablecoin depeg or a stablecoin issue on their network that they have to go and save. They're thinking ahead. which is really, really good. Okay, because like I said, right now, not only is it a one-way bridge, unless you have like a Bitfinex, or you go on CoinGecko and you can look at the exchanges that you can sign up to bridge back and forth from Radix mainnet to ETH mainnet, but they don't have a stable coin on the platform right now. And I'm sure after Babylon launches, like USDT, USDC probably died, they're gonna come onto Radix, but right now it's not. So I don't view this as an issue, and if it's not used, then it just gets burned. So it's almost like it never exists unless it needs to be needed. Let's keep going. Now let's go into how do XRD emissions work. XRD emissions are new XRD tokens created to incentivize good network security and performance. Emissions of new XRD tokens happen at the end of fixed period of the network time called epochs, and generally they range between 30 to 90 minutes long. Basically, every 30 to 90 minutes, a block is going to get validated. Or I know this isn't a blockchain, this is a distributed ledger. You know, take with that what you will. And then it says here the amount of XRD emitted is set so that the total of roughly 300 million XRD tokens are emitted over the course of 1 year. They're going to be emitting 300 a year approximately, depending on network usage. And then the remaining 50% of XRD is going to be minted over approximately 40 years of people validating the network. Lastly, to put the icing on the cake, let's talk about the transaction fees and how they work on Radix. Transaction fees are a small amount of XRD that must be paid with each transaction processed by the Radix public network. Transaction fees on Radix are burned by the Radix protocol, reducing the total supply of XRD. And if you scroll down here, they give you the approximate burn rate in XRD depending on what the transaction is. So overall transaction 0.0002 XRD. When you're staking, 0.5 XRD is burned. When you unstake, 0.6 XRD is burned. When you register a validator node, 5 XRD is burned. Update a validator node's metadata, 5 XRD is burned. And then create a new token type with its own symbol, which is a cool thing you can do on Radix. You can literally create a new token, and if you have a list of wallet addresses, you can airdrop the token to them. Like, it's just the way that their asset-oriented smart contract programming language functions just makes it superior, especially to the EVM. But that's another video. And that's 100 XRD per token type. So if you don't understand the significance of this, like think about EIP 1559 for Ethereum. Ethereum would probably be under $1,000 if it wasn't for EIP 1559, because billions and billions of dollars have been burned since it's been implemented. Supply and demand, right? If you have a supply that's shrinking and demand just stays the same, price has to go up because you have the same amount of people bidding on a shrinking supply. So to wrap this video up and to conclude, to give you my thoughts on this, I think their tokenomics are fan-fucking-tastic. They have some left over for their foundation to give out grants and just help the overall project. They have some to help save a stable coin. They saw what happened with Terra. Like, we saw many stable coins depeg, and you have the chain scrambling to try to fix things. And the rest are unlocked, and they don't have any VCs that's gonna sell. So with everything else considered, their asset-oriented smart contract programming language, their developer royalties, and like they've been building this thing for 10 years. Like I said in my other video, Radix is my largest holding right now. I have some yield farming positions set up on Uniswap v3 and on AussieSwap and Caviar Swap, as I showed you. So hopefully this video answered your question about Radix Tokenomics. If I missed anything, let me know in the comments. Let me know what you want me to cover next on Radix. I'm trying to cover as much as I can before the Babylon release because I want us all to make money. Like, I genuinely care about you guys. And lastly, we did launch the Grow It Owls. Go ahead and mint yours. The first one is free. You can mint up to 10 per wallet. After that, it's $1.11. If you hold the Grow It Owl, you get access to the best video in each section of our 8-section course, and it's going to be forever growing. Teach you the mindset you need to have as a successful investor and yield farmer, technical analysis so you can master your entries and your exits, bona fide security protocols so you don't get hacked, Web3 and DeFi fundamentals. Why is this whole thing important? How does it fit into the current financial system? Web3 accounting principles, intro, and advanced yield farming. And then we're also going to have options and stocks and other education on how to just manage a multi-asset portfolio like an institution. Like, we're trying to teach you how to invest like an institution. I've been an institutional investor since 2019 when I started my crypto hedge fund, and we're partnering with other hedge fund managers to really bring you guys the best alpha on not just crypto, but just managing your own portfolio. So mint to Grow It Owl. Obviously, you get access to a private Discord channel, and each Grow It Owl represents a raffle ticket for an actual Know It Owl, which is going to be like our paid mint where you get access to everything. You get a discount, and you get a whitelist spot to mint before anyone else. So with that, I conclude this video. I thank every single one of you for watching. I love all of you, and I'll see you guys in the next one. Take care.